Thank you very much for attending today's webinar. It's going to be about how to stay afloat in the turbulent times that we're facing at the moment for small businesses. And it's going to be focused on turning healthy profits into healthy cash flow. So, I am the speaker today. My name is Joel Davidson. I am the CEO of Positive Accountants. You see me there. I was clean shaven then. I now have a beard, but I hope you can recognize me. I have been the CEO of Positive Accountants for 5 years now. We focus on helping small businesses and startups and SMEs to manage their accounting services in an effective and efficient way. And one of the key elements of that is how to have a better cash flow, more effective cash flow function. So our goal for this webinar is to help UK business owners like you understand and manage cash flow challenges amidst economic uncertainties. So that starts by, what is cash flow? So cash flow is quite simply the net amount of cash and cash equivalents being transferred into and out of a business. Why is it important? Well, it's a vital indicator of a company's financial health. Ultimately, you've all heard cash is king. It's a very old phrase, but it's a very accurate one. And it shows a company's ability to meet the ongoing operational expenses, its ability, of course, to return money to shareholders, and its ability to continue to invest in its future and provide a buffer against future financial challenges. Now, without cash, it's very difficult for a business to do any of those things. And that's why it's critically important for small businesses to be able to conserve and generate as much cash as possible, because the only time a business ultimately faces liquidation is if it's not able to meet its operational expenses. So there are different types of cash flow. There's operational cash flow, so that comes from sales or services. So clearly, the more of that you're generating, the more efficient you are in terms of your clients and getting paid on time. There's investing cash flow, which is cash spent on or received from investments like buying or selling equipment or property. There are capital gains involved in that. And then there's financing cash flow, which is cash that comes from issuing stocks or bonds, or indeed taking loans, buying back shares or repaying loans. So managing cash flow helps identify trends, plan for the future, and make strategic decisions. And this is particularly important in the current economic situation, where we all know that the threat of recession remains a concern for all small businesses. There are rising costs and high interest rates that pose a real challenge for businesses, and cash flow continues to be a critical issue for SMEs and even medium-sized businesses in the current situation. So the cash flow paradox really is that, in our experience of working with small businesses, you may be a very profitable business, but you may actually have a very worrying cash flow. We see a number of companies that file accounts where they are making great profits, that they're generating excellent sales, they're growing the number of customers that they're working with. But of course, that's not translating into the cash that they're receiving. And that may mean that they're working with clients who are not great payers, or it may mean a number of other worrying factors for the business that we'll go into. Paradoxically, a business which is breaking even or even making a loss can have a much stronger cash flow. Again, if they are more efficient, they're managing both their revenue and purchase ledgers more effectively, they may actually be quite solvent, and that means you can remain a healthy business for a much longer period. So cash flow issues really are a symptom of poor health in a business. Now, so what are the causes of poor cash flow? Well, ultimately, the key cause is poor cash management, and that would mean a neglected receivables ledger, And that means essentially your client list of debtors who owes you at any one time, maybe unmonitored and unattended. So you're not actively managing well enough the list of clients that you've got. Equally, you could have a poorly managed purchase ledger. You could be paying too quickly, and that can also mean that cash is going out the door quicker than it's coming in, and that would be another reason for you to have poor cash flow. So to identify this issue, the common problem is incorrect invoicing, and it can be as simple as that. So you may be something as simple as not even sending them to the right contact in the business. That can cause long delays, especially if you're working with bigger organizations, larger organizations, in actually getting paid. It could be that you don't have a framework for chasing invoices, chasing overdue invoices. Or it could be that your payment terms are not clearly communicated to clients when you send out your invoices. You may not have considered applying late fees, for instance, once you send your contracts out, when you send your contracts out, or once you send your sales out. It could be that there are overdue follow-ups after staff turnover. So it could be that the person you sent the invoice to originally has left the business, and so you should be looking to make sure that you have the correct contact details at all times for your clients. So what are the solutions to the cash flow issues? Well, a credit controller clearly is crucial for financial stability and efficient operations within an organization. The job of a credit controller is like a friendly financial detective. They keep track of outstanding payments and sort out any hiccups with invoices. This helps keep our finances running smoothly. And ultimately, you may think this is a cost, another cost for the business, but really the role of a credit controller can be self-funding. It pays for itself many times over in some cases, because you can unlock the key to getting promptly paid by a number of key clients, which can really help you stay financially solvent for a lot longer. And this role can, of course, be outsourced, and it's a role that we offer at Positive Accountants to many clients who greatly benefit from having an additional credit controller outsourced who is proactively managing their receivables ledger. So how can we help you? Well, we can offer advice to give you advice and support to give you a simplified working capital structure. We can give you a named account manager as a dedicated credit controller for your business. We're Xero certified partners. So that means we provide digital accounting solutions such as automated follow-ups, automated expense management, all sorts of automated tools that will really help you to stay on top of your business cash flow and improve it. And ultimately, we can offer further help with debt collection if needed, if you've got to go down that route. It's not one we want to go down, but it may be necessary. And we can also provide assistance with further attempts at debt collection. So recognizing and understanding the causes of cash flow problems is really essential here. And ultimately, it comes down to rapidly growing businesses, taking on new clients without the resources to scale and assess their creditworthiness. This happens time and time again. We see it happen so often with many of our clients. It can be that you have an under-resourced team which is focused on sales and growth rather than compliance. And it's this lack of focus on financial control, depending on the organizational structure, that can cause many problems for your business. So how should we implement a solution to your cash flow problems? Well, we certainly recommend that you should establish a financial control function if you don't have one. That's essentially a dedicated mechanism for managing and monitoring the financial health of your business. We also believe we should emphasize management buy-in. It's very important for management to recognize the importance of financial control for sustainable growth and long-term resilience in your business as it evolves. And also, we are a great fan of leveraging automated tools. So we believe it's crucial to utilize technology to enhance the delivery of effective financial control functions. And why is it important to turn healthy profits into healthy cash flow for your business? Well, the results of healthy cash flow are that you have greatly improved financial stability. Furthermore, if you're fundraising, your accounts are bound to be scrutinized by investors who will want to see an organization that is serious about financial control. Once you open up your books to investment, if you're looking for investment, clearly one of the first things they're going to look for is whether you have an effective cash flow management operation. And also there's the element of peace of mind for the directors. If you feel that your cash flow is under control, you then have a greater ability to reinvest cash in the business and to further grow, strengthen your operations. So that's essentially our quick run through of the solutions that we would recommend implementing in organizations, and certainly we do that with our clients. And if you have any questions on that, we're more than happy to take them now. Or if you'd like to get in touch via LinkedIn or email us, we're more than happy to talk to you about how Positive Accountants can help you to improve the cash flow management of your business. Do we have any questions today? Perhaps not today, but thank you very much for this anyway, for attending. And in conclusion, it's a proactive cash management really is an essential aspect for maintaining your business health. And it's essential to actively engage in effective cash management strategies. We also believe you should engage with an external partner and collaborate with a trusted third party who isn't directly tied to your daily operations to enhance or follow-up processes. It's a lot more effective to receive follow-ups from a third party, such as an accountant, rather than from within the business, to really give your clients a kick up the pants and try to effect prompt payment. We also offer a complimentary business health check, so a no obligation complimentary business health evaluation from us as to the state of your cash flow function. So we'd be more than happy to arrange that. So the next steps are, if you have any questions, you're welcome to ask us, get in touch. You've got my email there. And you're also welcome to reach out on LinkedIn. But thank you very much for your time in the meantime, and I really look forward to hearing from you.